Is the recent weakness in the Canadian dollar a direct reflection of the decline in crude oil prices and fears of a global slowdown? From April 12th to May 31st, the Canadian dollar lost approximately 2.5% against the US dollar, and in the exact same time period, crude lost approximately 19% of its value amid concerns of global growth, coupled with nagging concerns over the US debt ceiling debate and the potential for a default. The Canadian dollar versus the US dollar pair has long traded with a high correlation to the price of crude because of Canada's export relationship with the US. The odd thing about the recent weakness in crude is that it comes at a time when OPEC has been implementing production cuts. Perhaps the outlier here is that Russia appears uninterested in cutting production, according to recent comments from Russian Deputy Prime Minister Alexander Novak. Canada's central bank has held interest rates at 4.5% at its two most recent rate decisions following an aggressive hiking campaign that started in March of last year. Expectations now are growing for a resumption of rate hikes from the Bank of Canada, particularly after better than expected Canadian GDP on May 31st. CME Group offers three different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micro for these examples. If a trader believes the Canadian dollar could bounce from here, they can express that by buying the June micro Canadian dollar futures contract at 0.7365 and targeting a move back to the February highs of 0.7550. Stop for this trade can be placed below at 0.7220. Now this trade can make $185 if the target is reached and risks $145 if you're stopped out of your level. If a trader believes the Canadian dollar could fall from here, they could express that by selling the June micro Canadian dollar futures contract at 0.7365 and target a move to the October lows of 0.7200. A stop for this trade can be placed above at 0.7465. Now this trade can make $165 if the target is reached and risks $100 if you're stopped out of your level.